Today, crypto lender Genesis files for bankruptcy protection, and Joe Lau of Alchemy discusses the developer outlook for Web3. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies on the rise this morning, even after breaking news late last night that Genesis filed for Chapter 11 bankruptcy protection. We'll talk about that in just a second. But as of noon Eastern, Bitcoin jumped back above the $21,000 level and Ether traded around $1,500. Meanwhile, Polygon rose to 98 cents. Both Bitcoin and Ether are up big for the week. Each of them rose nearly 10% in the past 7 days, while over on Wall Street, the S&P dropped about 2% for the week. All right, let's talk about those top stories, and we're going to start with Genesis. The crypto lender filed for bankruptcy protection late Thursday night in a Manhattan federal court. It's the latest casualty in an industry reeling from both FTX in November and Three Arrows Capital all the way back in July. Genesis listed over 100,000 creditors in the filing, with liabilities between $1.2 billion and $11 billion. Crypto World's Mackenzie Segallo spoke with Kaplan of Prometheum about the bankruptcy and what it means for both its parent company Digital Currency Group and the wider industry.
So last night we had a Chapter 11 bankruptcy filing from Genesis. Can you walk us through that document? Were there numbers that stood out to you? I know a lot of people weren't surprised at all that this finally came out last night, but anything that was a standout from that bankruptcy document?
Genesis and arguably Digital Currency Group had a lot of exposure to the overall industry, first with Three Arrows Capital, then with FTX, and with potential other matters as well. And what we saw was that they had Genesis had $3.5 billion in unsecured creditors in the filing, which is a big number. I think everyone was aware who's been following it of the matter with Gemini. But what we're seeing hopefully is this matter come to fruition and hopefully a resolution in the near future.
And just how significant is this to Barry Silbert's crypto empire and DCG in particular?
I think what we're seeing overall is the replacement of the existing crypto financial services infrastructure. DCG and the people there have been a major part of that. But what we're seeing is that people who were operating in arguably unregulated or gray areas and providing financial service products to retail customers are going to potentially feel the effects now that the retail customer has been left holding the bag and there's been exposure. And I think that regulators are going to pay major attention to this.
And I wonder if you can kind of explain how Gemini fits into the whole Genesis bankruptcy picture.
Gemini and Genesis offered in some combination an earn product, a yield product to Gemini's customers, which essentially was arguably a regulated financial service. And when the exposure to the debacles that occurred in the industry was felt by Genesis, essentially they halted withdrawals, and it had a knock-on effect to the Gemini earn customers. And what we've seen as of late is that the SEC has brought enforcement action for an unregistered securities offering against both Gemini and Genesis for this earn product.
DCG is this behemoth in the crypto space, and I just wonder what you think the significance is, perhaps not just to DCG's business model, but to the wider industry.
What we've seen overall in the space, particularly with the financial service providers, is that the lack of proper risk management, the lack of internal procedures, the lack of reasonable business practices led to situations where there was excessive exposure, such that when there was a reversion and the bubble popped in crypto, we saw who was swimming naked, and now we're seeing the aftermath of that. But I think what we're also seeing is that this situation occurred again with the .com bubble, and the companies that can survive now and that are innovative and actually conducting business compliantly under the law will be able to survive and continue to thrive as we move out of this crypto winter.
All right, next up, business leaders from around the world met in Davos for the World Economic Forum this week, and many of them talked about crypto. Here's what they had to say about the industry on CNBC's airwaves.
We pretty much always have some crypto conversation with you. I'm just curious because I don't think we've talked to you since.
I think all that's been a waste of time, and why you guys waste any breath on it is totally beyond me.
Because you just think the whole thing just is
going to zero?
Going to zero and it's fake?
Bitcoin itself is a hyped up fraud.
So what do you make then of BlackRock and other firms that are investing in infrastructure?
No, that's different. Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to move money.
Right.
So that is a ledger. That's a technology ledger type of thing that we think will be deployable.
When you go to the blockchain side, we have 200 patents applied for $100,000 in blockchain. So we understand it. We try to apply it. It is extremely hard to find the compelling value proposition yet. It will come because information, data, and ownership that can be accountable across jurisdiction is interesting. But we're sitting with 100 issued patents. I think we have more than most people will ever dream of having.
I've long said that crypto is a market in need of regulation. We need to know what the regulatory guideposts are. We need to know what a framework is to bring this asset class under the more traditional structures that have served volatile markets, volatile periods well, and that's more the centrally traded, centrally cleared types of frameworks.
I think that the blockchain technology continues to be something that could have really interesting utility.
For the NASDAQ?
Well, in the financial system in general.
Okay.
But when you look at cryptocurrencies, that particular ecosystem went through a massive reckoning. And I like to say that, in a way, you kind of saw what would happen in the financial markets if there were no regulation, right? It's just, you have to think about regulation as actually helping create sustainable, high integrity, trusted markets. I also think that the crypto world, it's lost trust, it's lost the confidence of investors. So what's going to happen next? I don't think it's going to die. I think that, frankly, there are certain cryptocurrencies that have real utility. More adults want to come into the room, and it's time for some really trusted players to come into the space.
All right, Web3 platform Alchemy just released its Q4 report on the state of development. In it, they highlight the surge in Web3 developer activity, up 453%, despite a crash in consumer confidence. Crypto World's Kate Rooney spoke with the co-founder, Joe Lau, about the report and the outlook for Web3.
So let's start with this report you guys had out this week saying essentially developer activity is surging despite what's happening with prices and consumer confidence in crypto. Walk us through some of the results here and the methodology behind this.
Yeah, absolutely. So like you alluded to, it's been a bit of a rough year for crypto. I think in the last quarter we saw a couple of exchanges start to have issues. I think we've seen consumer sentiment and consumer trust of those exchanges go down a little bit. We saw exchange outflows in terms of customer deposits about 45% down from last quarter. But on the flip side, what we do every quarter is we do a developer report where we look at the ecosystem and take a look at what developers are building, what the activity looks like. And we're really seeing kind of the opposite picture there, which was surprising to us too. So we're seeing really, really strong growth in developer activity. Actually, last quarter, we saw about developer activity up about 453% in terms of smart contract deployments, which is one measure that we use to measure developer activity. What that means is we look at the number of smart contracts, which are like little computer programs being deployed onto the blockchain. And quarter over quarter, we saw roughly 450% growth, which is really, really exciting. We're also seeing similar growth across a number of different metrics as well. We look at SDK downloads. We look at information that we have on our platform as well. And we're seeing really strong growth across the board, which was surprising, but it's still really, really exciting and makes us optimistic for the space.
It's really surprising. I was shocked to read the report, and based on what we talk about on a daily basis on CNBC, what's happening in the macro environment, and what's very crypto specific and some of the fallout this year. I wonder what is driving that optimism by developers. Why would people be building more in this environment?
Yeah, that's a really, really great question. So part of our developer report, one thing we do is we also look at the types of things that people are doing and why they're building it. One thing we're seeing as a reason for this potential uplift is a couple things. We're seeing last quarter, Ethereum went through the merge, which you guys covered, an improvement in the blockchain that makes it easier and more streamlined for people to actually deploy smart contracts and build on the blockchain. So we saw an increase there. We've also seen developers building more sophisticated applications. and using the blockchain more, which has been really, really exciting. We see still a healthy balance of types of projects and types of companies that are using the blockchain today. So we're seeing some infrastructure companies. We're still seeing NFT companies focused more on decentralized finance. But one really interesting trend that I'd call out here is we're seeing really a growth in companies thinking about what social media would look like in the next generation. So compared to Twitter, like a Twitter and a Facebook today, where Twitter and Facebook really own the user data, we're seeing a lot of companies focused on solving the problem of how do you let users own their data and use these platforms, but still have control of their data. And that's a really interesting trend.
There was an interesting line in the report about outflows from exchanges. Can you tell us what you've seen?
So we've seen in the fourth quarter, roughly about 45% of customer deposits leave exchanges across the board from what we can tell on the blockchain. So that's an estimate. That is, of course, a lot of money being transferred. So on the order of billions of dollars being moved from centralized exchanges. It does indicate less consumer confidence and consumer trust in platforms like these. At the same time, I think the goal of Web3 is to provide users with tools and a platform to be able to custody their own assets and be able to do what they can with those assets. So we're seeing a lot of new types of protocols and applications being invested in that will hopefully get us there.
What's getting in the way of decentralized games, decentralized social networks really taking off here? And what's your expectation over the next 5 or 10 years? What needs to happen for this to really become something that your everyday user is going to turn to?
2 or 3 big things that have to happen. The first is we really need to see the infrastructure and the platforms improve, become more reliable, and enable developers to build more things. So one thing we look at with this technology, but with all emerging technologies, what you see developers build applications, creators build applications. Those applications bring in more users, but what that does is it encourages reinvestment into the infrastructure, and it makes the underlying technology better. When the underlying technology gets better, developers are able to build better applications, and they continue to spin that flywheel. So more applications, better technology, even better applications, even better technology. We're still seeing that flywheel spin. But what I'd say is we need continued investment, both in the underlying technology to make it faster, to make it cheaper, to make it more reliable. And that'll lead to better applications, and that'll lead to more mainstream adoption and more user-facing applications like NFTs and DeFi that we saw in the past. The other thing that I'd say is it's still a very, very new industry. And this is an industry where there are a lot of developers and a lot of creators entering, but there still need to be more resources around education and resources around on-ramping both users and developers. So this is something that we've been focused on at Alchemy. Last quarter, we launched Alchemy University, which is an online program to help anybody learn how to develop on the blockchain. Since then, we've gotten over 100,000 applications, which is really, really exciting. I think it shows the demand from the developer community for educational material. We also launched a developer grants program last year. We've funded over 300 projects since then. So we're trying to do our part as best as we can, but I think this is definitely something that the entire industry has to work on as well.
Last word, Joe, if there's one space to watch within Web3 where you see the most momentum based on what's happening on your developer platform, what would you point our audience to here?
Yeah, I would first tell the audience, definitely check out the developer report if you want to learn more. We cover a lot of our methodology and also broad overview of the space. In terms of the area to watch, I would really look at the infrastructure and the underlying technology. We're seeing a ton of really, really exciting developments there. A lot of really exciting progress being made, and I think it'll really push the industry forward and change the industry a bunch over the next couple of years. So that would be an area to watch for sure.
All right, that's all for Crypto World this week, but we'll be back on Monday with a lot more. So we'll see you then.